Dear learners, we have come to an interesting topic and much awaited one. In this section, we will talk about export documentation process. Here, we will take an example of export from one country to another country and we will see sequence-wise the process flow, the required documents in each process, purpose of each document, who issues those documents to whom, and many more interesting learnings. So stay tuned till the end of this topic. For better understanding, we will consider two companies here. First company is Canada Corporation, which is based out in the Toronto city in the Canada, and this company is selling goods called as potatoes. Also, this company has nearest port called as Port of Quebec, which is used to ship the goods from Canada to other countries. Now, our second company in this example is India Corporation, which is based out of Bhiwandi in the India. And the nearest port for this company in India is Mumbai Port. So simply in our example, Canada Corporation is an exporter and India Corporation is an importer. Now let's assume that India Corporation needs 1000 kilograms of potatoes from Canada Corporation. In this situation, our first step in the process is sending inquiry of the products. And in our example, India Corporation makes an inquiry of potatoes to the Canada Corporation. Once the inquiry is received by Canada Corporation, the next step is sending quote of the inquired products. Here, Canada Corporation sends quote to India Corporation, and let's assume that this quote is explaining that the Canada Corporation is ready to sell 1000 kilograms of potatoes with below conditions. Condition number 1. Price per kilogram is 1 Canadian dollar, hence the total value of shipment will be 1000 Canadian dollars for 1000 kilograms of potatoes. Condition number 2. Estimated shipping and insurance cost is 100 Canadian dollars. Condition number 3. Estimated delivery time is 4 days after receiving an order from India Corporation. Condition number 4. Incoterm will be FOB, free on board, to the Port of Quebec. Condition number 5. Payment terms are immediate. Now my friends, we will see in detail about all Incoterms and we will also see payment terms and methods of payments in details in our next topics. But for now, let's hold and let's first understand the export process. Now, after the quote is received, then the next step is sending purchase order to seller. So here in our example, India Corporation agrees to the quote and releases a purchase order on the name of Canada Corporation. Now what is purchase order? A purchase order, known as PO, is a commercial document issued by a buyer to a seller indicating the types of product, quantities and agreed prices for products or services the buyer wishes to purchase. It serves as a legally binding agreement between the buyer and the seller outlining the terms and conditions of the transaction. Now let's understand what is included in purchase order. Here's what is typically included in a purchase order: buyer and seller information. The purchase order contains the names and addresses of both the buyer and the seller along with any relevant contact information. Here buyer is India Corporation and seller is Canada Corporation. The second point is purchase order number. Each purchase order is assigned a unique identification number for tracking and reference purposes. This number helps both parties easily identify and manage the order. The third point is order date. The date when the purchase order is issued, it signifies the start of the transaction process. The fourth point is delivery date. The date by which the buyer expects to receive the products or services. It serves as a deadline for the seller to fulfill the order. Here the date of shipment will be 4 days from the date of purchase order, which was agreed in the contract. The fifth point is billing and shipping address. The address where the products or services are to be delivered, as well as the billing address where payments should be sent. Item details. A list of products or services being purchased, including descriptions, quantities, unit prices, and total amounts for each item. This section provides clarity on what is being ordered. Here, item is potatoes and the quantity is 1000 kg. Terms and conditions, which is the seventh point. Any specific terms and conditions agreed upon by both parties, such as payment terms, shipping terms, warranties, return policies, and other contractual obligations. Payment information. Details regarding payment methods, payment terms, example net 30 days, currency, and any applicable tax or fees. Here payment is advance payment. The next point, number 9, is shipping instructions. Instructions for how the products should be shipped, including preferred carriers, shipping methods, delivery instructions, and any special handling requirements. Here let's assume the carrier is DHL company. The 10th point is signature and authorization. The purchase order may require signatures or approvals from authorized personnel within the buyer's organization, confirming their agreement to the terms and authorizing the purchase. Overall, a purchase order serves as a formal document that helps facilitate smooth transactions between buyers and sellers by clearly outlining the terms of the purchase agreement. It provides both parties with a record of the transaction and helps prevent misunderstandings or disputes. Now, once purchase order is received by the seller, the next step is acknowledging purchase order. The seller in this case acknowledges the receipt of the purchase order, confirming the acceptance of the order. Usually, purchase order is acknowledged with this help of document called as sales order. In our example, sales confirmation is issued by Canada Corporation and it is issued to India Corporation. Here, purpose of sales order is, this actually formalizes the agreement between both companies. In our example, the sales confirmation confirms the sale of 1000 kilograms of potatoes at a rate of $1 per kilogram. Hence, the total sales value is 1000 Canadian dollar. Hence, the entire sales value is 1000 Canadian dollars. Here, Incoterms is FOB at Port of Quebec, meaning Canada Corporation is responsible for loading the potatoes onto the ship in Port of Quebec. Payment terms is advance payment and the estimated delivery date is 4 days from the date of purchase order, which is also included. In the next step, Proforma Invoice is issued by the seller. Here the Canada Corporation issues Proforma Invoice to the India Corporation. Now let's understand what is Proforma Invoice. Proforma Invoice is the starting point of an export contract. As and when the exporter receives the trade inquiry from the importer, then exporter submits the Proforma Invoice to the importer. A Proforma Invoice is a preliminary bill of sale issued by a seller to the buyer before the actual delivery of goods or services. This point is very important to understand that the Proforma Invoice is issued before the goods or services are delivered. Proforma Invoice serves as a provisional agreement between the two parties outlining the terms and conditions of the sale. Unlike a commercial invoice, a Proforma Invoice is not a demand for payment, but rather an estimate of costs, providing the buyer with an overview of what to expect in the final invoice. Now let's see what is included in the Proforma Invoice. Here's what is typically included in the Proforma Invoice. First one, the seller and buyer information. The Proforma Invoice includes the names, addresses, and contact information of both the seller and the buyer. The second point is Proforma Invoice number. Each Proforma Invoice is assigned a unique identification number for tracking and reference purposes. The third one is date of issuance. So the date when the Proforma Invoice is issued. This serves as the starting point for the transaction process. The fourth point is the validity period. The duration for which the Proforma Invoice is valid. This specifies the time frame within which the buyer can accept the terms outlined in the invoice. The fifth point is the description of goods or services. A detailed description of the goods or services being provided, including quantities, unit prices, and total amounts for each item. This section helps the buyer understand what is being offered and at what cost. The sixth point is terms of sale. Any specific terms and conditions related to the sale, such as payment terms, delivery terms, shipping instructions, warranties, and return policies. The seventh point is the total amount due. The total amount payable by the buyer for the goods or services outlined in the Proforma invoice. This includes the subtotal, taxes, shipping charges, and any other applicable fees. The eighth point is currency. The currency in which the transaction will be conducted. This ensures clarity on the pricing for both parties, especially in international transactions involving different currencies. Payment instructions is the ninth point. Details regarding how and when payment should be made, including accepted payment methods, bank account information, and any payment deadlines. The 10th point is validity of offer. Information indicating that the Proforma invoice is not a final invoice, but rather an offer subject to acceptance by the buyer within the specified validity period. Overall, a Proforma invoice serves as a useful tool for both sellers and buyers in the negotiation and planning stages of a transaction. It provides the buyer with essential information about the proposed sale, allowing them to review costs and terms before making a commitment. Additionally, it helps the seller demonstrate their willingness to engage in the transaction and establish a basis for future invoicing and payment. So simply, we have seen here that Proforma invoice is issued by Canada Corporation and it is issued to India Corporation. The purpose of this document is, this is a preliminary invoice sent before the order is delivered. So here in our example, the Proforma invoice will include details like 1000 kilograms of high quality potatoes at 1 Canadian dollar per kilogram, hence total value of 1000 Canadian dollars. It also includes estimated shipping and insurance costs, which was 100 Canadian dollar, and delivery time frame, which was 4 days. This helps India Corporation assess potential import duties and secure any necessary approvals from Indian authorities.